Hello and welcome to the weekly wraps. Naturally, given that it's been the main focus throughout the week, I'm just going to start off with Greece. So of course the key date for this week was today, whereby we did have that Eurozone Finance Minister meeting in Latvia. So just heading in today, optimism was actually relatively high. So did see those comments yesterday from a Greek government official suggesting that a deal could actually be near to be implemented. So this was relatively upbeat, and therefore heading in today, some of the arrival comments were also relatively upbeat, suggesting that although a deal may not necessarily be announced today, progress is certainly being made. This therefore did buoy a bit of sentiment in early European trade. However, as the day progressed, it became more and more apparent that tensions were running high, and that such progress was not necessarily being made as a faster pace as required. So some of the sources running that Varoufakis did take a bit of a hammering and was actually referred to as an amateur and a gambler. So just in terms of press conference, a lot of the figureheads did say that progress had not been made today, so therefore this did reverse some of those early gains equities and provide fixed income products with a bit of a bid. So just in terms of the next date for your diary, Dijsselbloem said that May 11th, the Eurogroup will assess the situation. So the concerns are still very much lingering over any potential to make a deal, although Greece themselves are actually still relatively optimistic. And one thing just to bear in mind moving forward is that we did also see source comments this week suggesting that ECB could increase haircuts for Greek collateral as a means to obtain the ELA, which is something that suggests that Draghi did suggest today at the press conference. So very much something to watch out for on that front as well. But elsewhere, just from a data perspective, from the US, it's been particularly light. We did see those US durables today, with the headline was a substantial beat on expectations, but all the X numbers were lower than expected and revised lower. So as such, we did see a bit of upside in US Treasuries, although equities were supported by some of the large cap earnings with the likes of Google, Microsoft and Amazon. And finally, just in terms of other things we've seen this week, at the start of the week, did see the PBOC cut their RRR by 100 basis points. This did provide a bit of market volatility heading into the beginning of the week, although this then did begin to subside, with some analysts suggesting that it's a relatively peaceful action and may not necessarily be enough to get the Chinese economy back on its feet. So therefore we could see potential further easing in the coming weeks or months. But other than that, that's all we've really seen this week, so that's all from me, and thank you for watching.